Well, dude, I appreciate you joining. I'm excited to talk to you, honestly. I do you want to start with a quick intro into who you are and what you do, and we can kind of get into the weeds a little bit?
Yeah, man, definitely. So, yeah, my name's Clouded. I've been involved with Ethereum, I guess, for the last like I don't know, 8 or 9 years. To answer your question of like, when was the first time I bought crypto early in the stream? For me, it was 2016, um, and it was fucking Litecoin, man. So that didn't go so well. But yeah, no. Shortly after that, basically was all in ETH and have been since. And I've just been contributing and building and investing in the ecosystem for all these years. Specifically DeFi, been heavily involved in DeFi. Done a bunch of stuff, and yeah, like most recently, um, I've always had a thesis that DeFi credit is like the biggest unlock for the space, and most recently, kind of ETH strategy is a good bet on that overarching thesis, and been really grateful to get this protocol kind of like rolled out and starting at this time with this meta.
What was like your come up? Was it in DeFi? Was it a trade? Was it some article that you wrote? Like, what was your breakthrough and come up in crypto?
I mean, I traded every cycle, so I did ICOs pretty good, and I lost a whole bunch, but managed to keep it. My net worth is probably the same as the ETH chart. Not gonna lie. So like every narrative, I'm really good at spotting them early and getting in on the waves. I did good on ICO. I did really good on DeFi, and I did really good on NFT. I think my real social like kind of account blew up with NFTs. Like definitely the NFT cycle was way more social than before. Like in DeFi's and ICOs, man, everyone was just doing their own thing, like kind of trading and making money. But NFTs was really the social exploration of like CT and everything.
We were just talking about NFTs because somebody, I think it was Agent Chud, quote tweeted this thing, and it was uh, a sale of
Yeah,
loot
loot.
that sold for 420 ETH. And maybe I contradict myself on this because Trump coin happened, but it still doesn't feel like AI season 24 was euphoric, but it was not 2021 NFTs. Like it still feels like we haven't gotten back to that level of literally the most retarded human you've ever met is worth $5 million kind of mania that happened in 2021.
I fucking agree, man. Like I don't even think we've started like a proper cycle. I think we're just playing catch up until now. I think this was all catch up, man. I think this is TradFi playing catch up. If anything, they just realized they're offsides and they bought up all the big boys like Bitcoin and ETH and whatnot. And like, I think retail's really gonna to heat up. I agree, like Solana had its thing, Trump coin happened, but I think like, yeah, man, in 2021, even in DeFi season, like in 2020, it was way more sharps than just retail for DeFi, but generally you could come for every day for months on end, and there was like big trades happening. There was big farms happening, like mints and other shit there was just so much going on that you could wake up and flip one ETH into two ETH, go to sleep, and do that for like 3 months.
Yeah, what a time. Also, real quick, before we really get into it, I'm going to call this out because Clouded has motion and tweeted. If you want to chat, I will be reading the chat only on Twitch, twitch.tv/threadguy, or at bottom right-hand corner of the screen on Twitter. You can pop it out in the background, scroll your feed, and listen at the same time. You don't even think the cycle started. That's a crazy take, dude.
It started now. Like we just broke all-time high on ETH. I think this is the start. I think it's gonna get super bullish over the next couple months. That's my take.
I love it. Yeah, it hasn't gotten that crazy yet. I like the TradFi playing catch up thing, and we'll talk about it, especially as it relates to the DApps and the treasury companies. Can you give us an intro into what you're working on, what each strategy is, and why you are working on it?
Yeah, definitely. So ETH strategy, the most left curve explanation is it is a fully on-chain DAT. It's got two main products. The first one is Strat, the token, which you can think of as like a leveraged bet on ETH or a new form of staked ETH where it gets yield from EPS, like ETH per Strat versus just APY of staking validation. It's a different way to kind of amplify your ETH holdings if you're bullish. And then the other product is the debt side of the protocol that gives that leverage to Strat. It's for more like USD related holders that want to get high yield on USD. And this, at its core, this protocol kind of uses a volatility trade to kind of match these two sides of the market. It was heavily inspired by Saylor and what he did with his convertible notes early on.
And so, how much ETH do you guys have?
We have about close to 12,000.
Whoa! And what? How does that compare to the biggest ETH treasury companies?
Yeah, we're still small fish if you compare us to the TradFi guys. Like Tom Lee has a lot. SharpLink is up there. These guys have like well into the 100,000 and more. Um, so I think actually like Bitmine is in the millions. So yeah, these guys are big treasuries compared to us. But we don't really see ourselves as competing with TradFi. I see ourselves as kind of being an innovative DeFi protocol and more competing with other DeFi protocols.
So yeah, can you explain that? Like, what do you do unique, and what is the ETH strategy's edge over these massive DATs that can just acquire like millions of ETH?
So yeah, I think the DATs kind of like tick a few boxes for TradFi. They kind of bring crypto exposure to the stock market. They're like a new form of asset managers on crypto. It's and I think especially with ETH, like non BTC DATs, I actually think are turning into like who can manage these assets and turn them into more productive and grow the stack for their shareholders the best. So it's becoming more like managed ETF products or leveraged kind of like ETF products. And that works really well for TradFi because of the friction getting on crypto markets. For us, whilst we do the same, so at its core, all of us, all DATs, are all about increasing the assets per the equity layer of the DAT. So whether those are the shares or the token in our case, assets per token has to increase, assets per share has to increase. And in TradFi, especially non-MSTR DATs, they mainly do at the market issuances because they're capitalizing on this insane irrational bullishness in the market where they can just print shares, sell them for premium and buy ETH, which is awesome because they pump our bags. But Saylor, for example, actually didn't have this type of irrational bullishness when he started. So Saylor had to do something slightly different. He had to kind of, whether he realized it himself or the market told him, he had to kind of give some value to the market to be able to get the money to buy Bitcoin.
Mhm.
So he ran this convertible note strategy, and he gave Wall Street kind of the ability to trade the volatility of Bitcoin in return for his cheap credit. And that was really the core of what we saw as a team. We're a team of like quants and engineers that love this shit. And we thought that trade that Saylor did with his converts should be protocolized as a DeFi protocol of its own. So if you want to like take an abstracted left curve view, it's like Athena kind of productized a basis trade, which was being done in TradFi, right? Like they did the yield, the interest rate arbitrage. And we're kind of productizing the volatility trade that Saylor did in TradFi. So I think DeFi is all about democratizing big trades, tokenizing them and democratizing them. And that's the lane I like to position ourselves in.
Why did it take, like, why are DATs just now becoming the mania? Like, what started this domino effect? Was just MicroStrategy going so well?
Yeah, I'm not 100% sure. I think so. But it definitely started after Saylor did his ATM issuances. So when he announced he was like going to raise 21 bill or 42 bill of MSTR through at the market issuances, I think that's really when it kicked off. And we were actually starting, like we wrote the white paper of ETH strategy before that happened. And we were hunting in doing ETH strategy on this convertible volatility trade well before this whole at the market issuance mania kind of started. And then I think other DATs probably saw how Saylor was doing this, and TradFi is good at speed running things. They probably saw the future of how this could go and turn into like asset management plays and whatnot. And they kind of decided to do it on other assets. I think deservedly so. Like for Ethereum, it makes sense. Like it should have been done before. A big thing that we were actually talking about when we started ETH was like, this should be like MSTR should be done for ETH, right? But it should be done on chain because like Sailor can't even do this on chain with Bitcoin. It doesn't have any smart contracts, but this can be done on chain for ETH. So yeah.
Makes sense. Okay, so on the topic of these DATs, I okay, I had a guest on a couple weeks ago that gave a take that's related to something you tweet about a lot. Is Avi Feldman came on and he basically said, because I look, I basically prompted him and was like, look, 3 months ago ish, I had David Bailey from Nakamoto come on the stream and he basically said, threadguy, anything you're gonna talk about for the next 6 months to year that isn't about treasury companies, you are wasting your time. Drop everything and just pay attention to treasury companies. And 3 months later, I'm talking to Avi and I'm like, man, I was told this early. I paid attention. I've tried my best to lock in and figure out what's happening. And I just felt like there was not a trade to be made ever. There was no trade. Like I didn't know what the trade was, right? MSDR hasn't done that well. Like what was the trade? And then Avi comes on and he's like, okay, I'm gonna say this and I'm gonna catch some heat for saying this. Specifically with these sole treasury companies, there is no trade. And the main thing that's happening is insiders are getting an opportunity to sell their locked soul into these DATs. And it's basically just exit liquidity for the insiders to dump on retail. And you've made a couple tweets about it. I have one pulled up and it says Solana, parentheses, and all non BT or ETH DAT companies are just exit liquidity vehicles into the TradFi markets for locked and overinvested bag holders. Like, can you talk about what is wrong and what the truth is behind these Solana DATs?
Yeah. I think that the truth is hard to debate, but I think that there's a very bright angle where these treasury companies obviously tap into TradFi liquidity, right? And there is like for some big tokens that are not Bitcoin or ETH that are not fully liquid and unlocked and whatnot. There might be some like VCs, there might be some big bag holders and people that can't get out of their positions with just on-chain liquidity. So if they seed a treasury company with the token instead of seeding it with dollars, then kind of what could happen on TradFi markets, what is possible, not saying this is what they will do or whatnot, but they probably can do, is they can just use that as a way to sell stocks into TradFi liquidity versus selling tokens into on-chain liquidity. So I think like my take is this, like with all metas, whilst it starts off with some sort of fundamental exogenous value, it kind of obviously gets irrational and people abuse it a lot. Like we saw this with ICOs. It started because, a DeFi protocol couldn't raise money. So they decided to do it publicly. NFTs, like, kind of started off being like, these projects that really wanted to do these things. And then just mints turned into these like flip and flipping type of things, like get into the mint and flip it. And DeFi too, right? Like maybe Olympus was like kind of innovative and very innovative in my opinion. And then like all the forks that came after it were just max Ponzi's or whatnot. Not all of them, but a lot of them. And that's the same. Like I think like MSTR maybe has done a fundamental exogenous trade where it does the volatility trade that we touched on. And maybe these ETH DATs kind of like build on that with their kind of less fundamental trade there, but they kind of like have this other fundamental kind of view of like being an asset manager and getting access to these things. But then like maybe as it goes towards the long tail, it becomes this kind of just like get in and dump and kind of max extract as usual.
So how close are we right now to that long tail where DATs, which started as a new innovative vehicle, has become this get in, dump as fast as possible and extract? Like where are we on that scale?
Oh, I don't think we're too close to the end. Like we don't actually have a major Solana DAT, right? Like unless I'm mistaken, and we don't really have like the Sui's or Hedera's or like the next phase down from like the Bitcoins and ETHs. We haven't even seen those yet. Well, I think like and then we haven't got like meme coin DATs or like this other shit that like maybe they're not even established tokens, but like TradFi starts ponziing up their own fucking token on chain and datafying it and selling it into, like, it can get crazy, crazy. Like I've seen some crazy shit in crypto. And I think TradFi, my take is they actually better at doing this type of crime and ponziness than we are. So I think it can get way crazier, but it hasn't got there yet. Like we might start scratching the surface there. And I think all DATs like are going to go through this phase after like a couple years where 90% of them fail to kind of grow their treasury or accumulate more assets or have this fundamental value, and they get acquired by other ones, and they kind of like consolidate into a few properly managed DATs, which are like the bigger ones, etc.
You know, I don't mean this as FUD because you run a treasury company, but I feel like the DAT meta is the most boring crypto euphoric meta, if you will, that we've had in a long time. Like it's so boring. And I think you're right. Like we will see. I mean, right. Probably every coin in the top 100 will have one, right? I don't see how they would. By the way, I'm shocked it hasn't happened yet. We haven't seen a massive Doge or a Pepe or even Mog type of treasury company announced where they're really just criming these things up. But my question for you, because I really am trying to get this, because it is, I mean, it's the topic, right? What, like it or not, people think it's boring, people love it. It's the topic. Can you mansplain to me why these things deserve to trade at a premium to MNAV? Especially like DAT number 19. Like why are they just trading at a premium still? I'm trying to get it and I don't. Yeah, man, like full just like mansplain this shit to me, dude. Like I'm your girlfriend.
Oh, dude, that is, bro. I can't even explain this to my girlfriend. So I don't know about DAT number 19, but I would say the reason why like the current DATs even have a premium is kind of like financial alchemy, if you will. It just like how a company like Apple and Nvidia, right? Like they trade on based on future revenue. Okay, like you buy Apple stock because you think that they're able to sell even more next year. The consumer base grows, they innovate on their fucking shit, and they increase rev. And like they sell based on future revenue. You speculate on future revenue. I think the most mansplained way is that these DATs can speculate on future revenue too, but their future revenue is the ability to accumulate more assets and the velocity that they accumulate those assets. So it becomes a like if you want to be really retarded, it becomes a time trade. Like if you see a DAT is raising like $20 million this month and buys $20 million of ETH, and then next month they raise 40 mil and buy 40 mil of ETH, you can assume like 100% velocity month over month. So if you're buying it at 100% premium to MNAV, you're really only buying it at next month's fucking like fundamental premium. Like, yeah.
So, and the thing about it then is like, okay, because I'm just honestly, one of the reasons I want to have you on here is just to ask you questions. Like, okay, so if you're buying at a premium, you're basically speculating that Bitcoin treasury company will be able to acquire more Bitcoin per share. And so you're trading at a premium, betting on that to happen, but you're basically front running it happening. So you're trading at like the premium that you hope will be the standard a month from now. And you're kind of just like front running it the whole way, right? Like, right? Like you're just front running what you hope happens and sort of aren't you just taking on like extra risk? Because if it doesn't happen and they aren't able to increase Bitcoin per share, then you just get wrecked. The premium depreciates completely. And then it was like, fuck, I should have just held Bitcoin.
Yeah, you have two risks. The two risks is like, and you need to believe these two things to be true to even play the DAT game, right? The first one is you need to believe the underlying asset goes up in price, because that actually, that fundamentally keeps the share like strong. So if you don't believe in the underlying, if you don't think Bitcoin or ETH are going up over the next like couple months or year or whenever you want to do this trade, you probably shouldn't even touch it in the first place. Like that needs to be true. The second thing is you need to believe that that particular DAT that you're investing in, whether it's Saylor or Tom Lee or fucking, like Joe Lubin or Clouted, like they can like fucking accumulate and actually grow the EPS or BPS over this time and keep that velocity or do something about it. Yeah.
Makes sense. Okay. Here's another question for you is that there's two takes that are getting thrown around a lot. One is that, the coldest, most viral take ever. People still post this and say hot take, which is so ridiculous. Hot take. The cycle is gonna end with all these levered dats blowing up. Like, yeah, hot fucking, you're so brave to say that. But the other side of it is everyone is like, there is going to be this cascade where every DAT or most of them are trading at a discount to MNAV, right? Like they have more of the underlying asset than the shares are worth. Like the Grayscale trade, I guess, which when that happened, I didn't understand what was happening. So, do you think this is gonna happen? Like, is there gonna be a point in time where all these things blow up and I can buy $100 of SOL for $80 in one of these treasury companies?
Yeah, I have a lot of thoughts on this. So the first one, the hot take, is cold as fuck. I think that if you look at it, basically all of the ETH stats, they don't even have leverage. Like they're just doing equity issuances. They're selling equity to accumulate assets. They're not issuing debt. The only one that actually has meaningful debt is MSTR, and its debt is very well serviced. Like it doesn't actually have that much debt in comparison to the assets it has. So it's quite safe. And also the debt is unique, right? And this is why like our protocol is kind of like also doing the same thing. It's issuing long dated debt,
Okay.
right? These debts are not due for 4 years. Like they cannot get margin called for another 4 years. So you're betting on like Bitcoin or ETH to be down, to go down and stay down for the next like 4 years, right? So it's not a short term like Aave loan that you can get liquidated on, right? So I think the leverage unwind is unlikely. The one that is likely is the MNAV scenario. Like the premiums disappear and they go down. Um, I don't think this I think this is what leads to kind of the consolidation of DATs and potentially takeovers or cheap sells of the assets. But I think like there's solves to this. And I'm leaking a bit of stuff here, but like DeFi kind of solved this years ago, and eStrategy is also going to implement this soon. Like you can always kind of have an escape valve if your net asset value drops like that low. If your like equity drops below your NAV, you can kind of like lend out your treasury or do some other shit that allows allows like this escape valve to kind of soothe the blow. And with public companies, actually, I think like if they don't do something like this, like if Saylor or Tom Lee don't start lending out their treasury in some way or shape or form, if it stays illiquid, then there can be takeovers at the corporate level. Like
Huh.
in DeFi, we call them RFV attacks, right? Risk-free value attacks. In TradFi, that's basically like a shareholder takeover and disbursement of the assets. So
Like,
yeah.
I never understood why, if say strategy drops below MNAV, why would Sailor be forced to sell Bitcoin to buy more shares? Like, couldn't you just sit on the fucking treasury? Like, why?
You would no,
Who's
he would
forcing
not
him?
be forced.
Like,
No,
okay,
he would not be forced. He's only forced at the expiries of his converts. And even then, if it drops below MNAV, he can always just like raise money and buy his own stock instead of buying
or
Bitcoin.
couldn't you
He's
like
technically
borrow against the Bitcoin and use the money to buy stock? Or is that just like,
You could do that, but that would probably be a worse loan for him. He has access to better debt against his stock. So he would just borrow against his stock and buy more of his stock. He would leverage loop his stock.
okay, this is gonna be really retarded, but I think you're really good at explaining this stuff, and we've done a lot of DAT combos, but we haven't really gotten the weeds too much. Can you explain this concept of how this like debt works and what exactly you're doing when you're selling shares to buy assets? Like, is it you have like 4 years on a like long tail loan kind of thing that you have to pay back, assuming the asset goes up? Like, how does that exactly work?
Yeah. So if I was to mansplain this, I'd say there's two ways that these DATs accumulate assets. They do it through equity issuance or debt issuance,
Uh-huh.
right? The equity issuance is the at the market sales. They print more shares, they sell it into the market to make dollars and buy the asset. So ultimately, they only do that when the shares trades at a premium. So the assets that they buy are worth more than the shares they diluted. That's equity. There's no debt when they do that. So there's no actual leverage. It's purely diluting the equity layer. Now, the other form is they can issue corporate debt. And this is where it gets interesting. And this is what Saylor had to do, in the last 2 years, because there wasn't this irrational bullishness right now to do the equity issuances. So companies can issue bonds just like governments do, right? Like treasury bills and whatnot. And they're usually quite long dated. So there's a special bond. It's a convertible bond. It's a convertible note where you sell a bond where it's basically you're taking a loan from whoever buys the bond. But instead of promising their dollars back, like their loan back, their principal back, you give them a conversion right to not only be able to choose to get their dollars back, but choose to get back stocks instead of their dollars.
Yeah, okay.
And you never actually have to pay the debt back if over the loan term,
Stock goes up.
the assets go up enough, they will
Yeah.
always ask for stock instead of debt.
So ideally, if you just go up only, you never have to pay it back.
That's the whole idea. And the reason why Saylor is dating these at 4 to 5 years and ETH strategy, we are dating these at 4.2 years, is because we assume or we guess that over a 4-year time frame, the value of the underlying is going to be higher than the time that we're kind of issuing these loans at now.
So worst case scenario is that Saylor issues all of this debt on these bonds, on these loans basically, and then 4 years from now, 5 years from now, Bitcoin price is in the gutter and people want cash instead of strategy. And then you're like,
Yes. And then he has to sell the Bitcoin and pay them back. But he won't actually go insolvent because his debt is like a smaller fraction of his equity. That's where the management comes in. So even if literally all his debt has to be paid back in dollars because Bitcoin goes down, if it goes down far enough and it's worthless, he won't be able to pay it back.
Yeah.
But his debt is kind of at a good level.
But you could get really irresponsible and lever up so hard that you could also print more shares. Is insane that you can just do that. How does that even work? Is there a limit on that?
That's TradFi, man. No, there's no when these guys announce that it's oh, we're gonna raise $20 billion and everyone on CT is like, holy shit, they're gonna raise 20 bill to all they're doing is saying we're gonna print $20 billion of shares and sell it into the market.
How is that legal?
Yeah. I mean, crime is legal in TradFi, and
so you could just add supply. I mean, is there a limit on how much you can add?
No, dude. Shares are at this discrepancy of the company and the board of directors and all that other fancy smancy stuff.
Dude, that is insane.
It's not governed. It's not governed by code like us, bro.
Bro, chat, do you understand? You could just fucking print more shares. That is So why would Saylor ever need to issue debt? Why couldn't he just infinite print shares? Because you print too many, then stock gets fucked. You have to balance it, right?
No. It's actually, this is the best question. This is where you're hunting in the right direction. Why wouldn't he? Because the only time it makes sense to issue shares is when they trade at these MNAV premiums. Because you're selling less shares than the amount of assets you can buy. But Saylor 2 years ago didn't have these crazy irrational bullishness with the premiums. So what he had to do was he had to find a way to raise capital, and the market kind of forces you to give value to get value. It does this in every possible dimension, right? That's finance. So when he creates these convertible notes, these conversion rights in these notes, they're basically options on MSTR, which is a proxy for Bitcoin. And options are valuable, right? Saylor purposely mispriced the options in these convertible notes. So he's selling cheap options. And Wall Street, or anyone that trades options, they love cheap options. Because when you buy a cheap option, you're able to perform an arbitrage, right? If I sold you ETH for $1,000, you can literally go and sell it for $4,000 tomorrow, right? That's an arb, right? I sold you cheap ETH. In the options world, no one sells cheap assets because they're not retarded. But in the options world, they do misprice options on purpose if they have a fundamental need to do it. And usually this fundamental need is two things. It's either financing or insurance. And for Saylor, it was to finance the purchase of Bitcoin. So he sold cheap options in these converts to get debt to buy Bitcoin. That's all he cares about. But Wall Street, bro, Wall Street got these options that are super cheap, and they can then go and arb the volatility of Bitcoin. Because when you options are a volatility instrument, they're not necessarily a price instrument the same way as spot assets are. So you can actually eke out some insane yields and gains by getting mispriced options. And that's the value that Saylor gave to the market. He opened that trade for these guys to get this debt to buy Bitcoin. And that is actually the core of our protocol. That's what we've kind of productized here in ETH strategy in DeFi.
What a fucking movie. That's awesome. Got it. And so you only want to issue when you're trading at a premium because you have to issue way less. It makes sense.
Yeah.
Okay.
Yeah.
And I'll let you go in a few minutes, I promise. You have time for a couple more questions?
Yeah, I got time.
Tell me, can you explain the Grayscale trade? Are you knowledgeable on this?
Or the trade?
The unwind. The unwind.
A bit. Yeah. So it's a bit different. Like Grayscale GBTC, it had an illiquidity problem, right? Like so 3AC kind of like bought a whole bunch of this because they can like there was like some arb because it's illiquid, it trades at a discount.
And
so
what was
buying,
GBTC?
It's just like think of it as an ETF that you can't actually sell into the market.
Cool.
It's illiquid. It's a fund. It was a fund that held Bitcoin, and GBTC was shares that were like backed by the Bitcoin in the fund. But the key is it was illiquid. So because illiquidity has risk associated to it, it trades at a discount. And basically, you can buy this asset at a discount if you believe that in the future it will become liquid and be repegged to par value. So, like, let's say Bitcoin's 100K and one GBTC should be worth 100K, but because you can't actually do anything with it, you can't get the Bitcoin, it's worth like 80K. It's got this discount.
Got it.
But you believe that in the future you can get that Bitcoin out of it, right? So that's where it becomes this kind of arb. And 3AC basically the unwind was because like 3AC and some other funds maybe like they were sitting on big stinking bags of illiquid stuff, and then they got liquidated elsewhere, and their fund had to liquidate these illiquid assets and kind of like had this big fucking blow up.
And got it. And you could buy it at this extreme discount for the.
Yes, you could buy. Yeah, you can actually still see the discounts on the chart. So if you pull up GBTC charts and layer them over the actual Bitcoin price for like the last 5 years, you'll see where it was trading at a discount.
Word. And that's Barry Silbert.
That's Barry. That is Barry Silver. Yeah.
That's awesome. It gets talked about a lot, but I don't feel like that many people like understand what happened. Now he's like a Tau maxi, isn't he?
Yeah, man. I don't know. These guys keep going on to the next thing, like crazy.
He talks about BitTensor a lot. Yeah. I mean, okay. So what happens now? You mentioned at the beginning that you think TradFi is playing catch up. How much more money does TradFi have to pour into these crypto vehicles?
Fuck, man. TradFi got infinite money, bro. Like I don't know what they're gonna do. I don't know if it's like I don't like personally. I don't like the fact that we actually let as an industry and we supported Wall Street coming in and buying all of our assets. Like that is like, it feels a bit wrong. And we're cheering on it because price goes up, but I think the real moat for us as an industry, as crypto, is to have the value on chain, not off chain. Right? Like we don't want all of our coins and our tokens to be sitting in corporate treasuries and then let them issue products off of this in a permission fashion. We want new products to be created on chain and for users to be able to access this without any permissions and to have all the value on chain and that value go back to the holders of these like chains, etc. So I think like it was inevitable that it was going to go this way. But yeah, that's like a kind of like a repercussion of TradFi coming in and just buying everything. But that's also why I'm trying to build, on-chain value with like ETH strategy, for example, right? So I guess like that's kind of like my overarching conundrum with what's happening here.
So there's this thing I've been asking a lot of people about now, which is like, okay, TradFi, there's a infinite crypto bid happening right now. People want to say the cycle's over, whatever. Whether you think the cycle's over or not, the crazy bid came in. The crazy inflows were not from the crypto retards on CT. It was these institutions coming in, buying crypto equities, making new vehicles to invest in crypto, and buying it in trad markets. And then in tandem, all these big institutions, the Stripes of the world, every bank coming in and saying that we are going to launch an L1, we're going to build an L2 on Arbitrum, we're going to launch a stablecoin. And at no point really has the data shown that these flows are going to come back on chain. Like I, I have a lot of scenarios in my head as to how they do, and I think that they will, but the data doesn't scream in your face. The institutional flows are going to trickle down on chain, and our existing products are going to get PMF. Our existing bags are going to go up. Like, I don't think that there's much that says that outside of majors. So my question to you, as someone that's so bullish ETH DeFi on chain, is: are we going to catch these flows on chain and see another like on chain mania, 2024, 2021?
I think that we're going to catch these flows already with the things, and this is why having crypto native on-chain value, like having products on-chain, is important, because TradFi will allocate if we have the good products. Like they have to stake their ETH, and fortunately, like the best way to do that is with like on-chain tokens like LSTs and whatnot. So that will come in. If they want to lend their ETH, the biggest ETH lending markets are, you know, on-chain in the best ways. And it's better. Like Aave is a fundamentally better product than lending your ETH through a brokerage account that has like 2-day margin calls and could have like some risk and whatnot. Sure, it's insured, but like it's just a better market overall. And I think that as long as DeFi builders on chain keep building new products, new yield products, new kind of like things, token sinks, or just like yield things that attract capital on chain, I think we will still keep winning, because TradFi can buy the tokens, but if the best thing they can do is inject it right back the fuck in, then we will keep winning. So it's very important that we keep building on-chain products. We stop trying to do this whole, like, I mean, the RWA stuff is inevitable. I think it should happen. I think everything will come on chain anyway. But from DeFi specifically, we cannot let all of finance be inherently off-chain but tokenized on-chain. It has to be inherently on-chain, used by off-chain capital. That's like the balancing act that we have to really be careful of. So I think yes, as long as we keep building good products.
I mean, I like that take. It's one of these things where it's you have to just be undeniable, and if the product is better, the product is better, and that's just how the world works. It's like raw. You know, there's nothing to say. Like I had a conversation with a trader friend of mine, and he had this sort of sobering take, and he was just like, today is the most valuable being crypto native will ever be for you, and tomorrow it will be less, and tomorrow it will be less, and tomorrow it will be less. And it's one of these things where it's just like the market is so just brutally capitalistic that the better product just wins, right? Because before it was like no one really had access to crypto. Now everyone has access to crypto and understands the game that's being played here, and it's like the best product is just gonna win. And so it's like, yeah, we're fucking playing against the big boys now, right? It's like, yeah, you're competing against Stripe and all these massive institutions, Bank of America, and all these people. So it's like, yeah, the best product will win. I'll ask you as like a sign off. I kind of ask you this like 9 different times indirectly, but I think it's a good place to wrap. Is like, how much juice do you think we have left in this cycle and in crypto mania? Where's it gonna come from? What's it gonna look like? How is it gonna change the game that's being played right now?
Nice. I think that we're very like more intertwined with global liquidity and macro markets in general. So I think that probably analyzing that is a good way to see how crypto goes. But it will obviously have more like steam in it than TradFi and other markets. I think a minimum of like 5-6 months of bullishness and a maximum of probably 18 before we bust. Like I do think that there's going to be some macro tone down for some reason in the economy, like whether it's like some fucking bullshit political stuff, war, or like some just like normal cycle, like some 18-year land cycle or property or something, right? Like I think there will be some blow off. But the denominator is fucking worthless, bro. So just long assets, sit back. There's going to be bumps on the road, but the denominator is fucking worthless. Like people are tripping out. Like what's happening? Like, oh, credit card debt's at all-time high, student loan this, car loan this. Like, dude, like Like nothing fucking matters, man. Like the denominator is literally worthless. Like we are witnessing the debasement of fiat, and that just means that like yeah, even if it's bumpy, assets are going up only. Like max pain is ironically the rich getting richer, the asset holders getting richer, and everyone else being forever generationally fucking sidelined. Like that is the dystopia that is probably gonna like play out. So yeah.
I want to ask you one more question, or I don't even know if this is a question, more of an observation. I'll let
Yeah.
you go because you're great. I feel like I don't exactly know. I'm like fairly young. I'm 23 and I didn't even have any concept for what markets were in really in 2018, but really like 2021, 2020. And I feel like there has been this shift. Maybe it's already happened a while ago and I just now am able to recognize it, where at some point along the line, Basic Z tweeted about this and he was like, the scam, like the people pushing the scams used to believe the scams. The promoters of it used to believe in it. Donald Trump tweeted a CA, like Microsoft execs are in their earnings call talking about $1,000 a share while they're selling them for $350 a share. Like World Liberty Fi is a thing. Trump admin is like launching scams. People, AI companies are spending 10 figures on AI researchers. Like it feels like we just hit this inflection point where everyone, it's almost like a giant game of like 3-3 Prisoner's Dilemma. And a couple big players folded and said, fuck it, I'm all in right now. And then all of a sudden there's this like cascade effect of people being like, yeah, the denominator is worthless and I need to squeeze as much value and money right now out of this as possible. And it feels like everyone inherently feels this, but maybe is unable to articulate why they feel it or how they feel it. And crypto is just a little bit early to this trend. I don't even really know what I'm saying or asking, but it feels like somebody fucking rushed to the cornucopia and then now everybody feels like they desperately like primal have to do it right now. And it's hard to like, I talk about it with Malcolm every day. I don't even like understand what I feel, but I know that I look around and everyone feels this. I'll use the same word again. This primal drive to win, like right this second, because there's a clock and it's ticking and you don't know how much time is on it, and the dollar's getting worthless, and there's top signals everywhere, but they just keep getting toppier, and everyone's scamming and printing money, and like it feels like we're in the early innings of desperation. I don't know if I sound insane, but can you like tell me what I'm saying?
Yeah, man. Like it's real. Like this is 100% real. Like whether like I call it maybe hyper financialization or financial nihilism or whatever like Balaji actually talks about this, right? He's like people don't even like the economy and the markets and growth in general, like real fucking like society progression is not seen anymore. It's just felt in a way that people can't understand. It's like if you look at the world, you stop looking because you have shit to do in your life, right? Like, just normal stuff. But it's so slow paced and things are moving just so quickly that like when you look back, like if you look at a bullet train and if you keep looking at it, you see how fast it goes. But if you look away and then you look back, it's all the way over there. This is just the world that keeps fucking like it's just hyper speed. And yeah, dude, I feel the same. I feel like nihilistic about it. Yeah, like it's. I don't know if this ever goes away. I don't know if it changes. I don't know if it ends badly or if it ends in like some sort of utopia somehow.
Yeah.
But it is true. Like I think just recognizing it is the best thing to do right now. But like that's 100% real.
Was there like a moment in time? Because the thing about it too is I'm a perpetual optimist on this thing, and I used to every stream I would ask the guest how long do we have to make it, and I stopped doing it because I was like at some point I want to have people come on 3 years, you have 5 years, they would put some arbitrary number on how long you have to make it, and I would think to myself, man, like at some point I would like to have kids, and I would like to subscribe to the idea that my infant child has more than 3 years to make it. I don't want little bro in preschool thinking about where we are on the DAT cycle. So I am optimistic that it's never as bad as it seems. It's never as good as it seems. It probably lands somewhere in the middle. Was there like a moment where was it COVID, stimmy season, that things like shifted? Like, have we always
Dude,
just
I
been
think
edging
so.
to this? Or like, was there like a moment?
Bro, I think we were like logically we were always edging to this ever since like the economy kind of became a massive fucking Ponzi. But I think it definitely hyper accelerated after like 17, 18, 19. Like those were the golden years, man. Like rap music was at its peak, vibes were amazing. You could go out, you could do shit like in life. And then literally 2020, 2021 came around and suddenly you're in this rat race that is like accelerating day by day by day by day and just nihilistic as fuck. Like I literally listen to the Future's albums from like fucking 2018 and 19 to like reminisce back in like before like this shit hit the fan. Like that's I think I think it's then for me at least personally. Maybe people feel differently.
Yeah. It's a weird topic, dude. But man, you're awesome. Thanks for coming on and fucking it's fun. Like I don't know. I feel like I talk about we interview someone at this point. I've probably interviewed 10 people that run a treasury company or have some affiliation with the DAT in some facet, and I ask them questions and I'm knowledgeable enough to do the convo and learn some shit, but I haven't really like got into the weeds. I'm like, wait, this doesn't make sense. And so I think I appreciate you coming on and fucking breaking some shit down. I think the audience appreciated it as well. But Clouded, you're awesome, man. Is there anything you want to say on a sign off? Thanks for staying extra, by the way.
Yeah, no, thank you for having me. This was really great, man. Like I had so much fun. This type of philosophical like conversations is like it really gives me energy. I think it's good to think this way and take time to like think about these things. But I mean, my sign off, man, like if people are listening, like follow me on Twitter, follow ETH Strategy. We are really trying to build something innovative in DeFi. We actually have a really nice yield product coming out in partnership with Derive. It's going to give yield from ETH volatility. This has never been done on chain before. It's a USD, delta neutral product. Please reach out if you have any questions or whatever the fuck. But yeah, that's it from me, man. Like, yeah, stay lit.
Clouded, you're fucking lit, bro. I'm gonna talk to you offline. I feel like we have some things to talk about. Thank you, man, for coming on.